1, 2, 3. Tyrone, what's up, buddy?
Good, not much, man. How you doing?
Good to have you in Cleveland, man.
Thanks.
In town, filming an episode of Spilling the Beans, and Legacy Wealth Academy.
Yeah.
Right.
Yeah.
And so I want to get into that. I want to get into, you call it 12 pillars of essentially the path and the process in order to start getting into buy and hold rental real estate, and simplifying it into very attainable, achievable, workable steps. And I'm super pumped to check that out. But before we get into that, man, and I want to talk about that, but I want to talk first about your entrepreneurial journey, right?
Yeah.
I know you come from Philly, right?
Mm-hmm.
Not handed all the business, right, that you have right now, not handed all the real estate portfolio that you have right now. Worked through a lot of adversities, worked through a lot of crazy stuff. I want to hear a little bit about your backstory. What gave you the impetus to pursue real estate, become an entrepreneur? Like, what was the fire in your belly that got you excited? And so let's start with the backstory.
Cool. So grew up in the city of Philadelphia. Thankfully had mom and dad in my life. Not a lot of folks coming from where I come from didn't have that like full family unit, but we did. And my parents were like entrepreneurial. My mom, she probably started 4 or 5 different businesses at some point throughout like my journey up until I went off to college. And that was like, the combination of my mom always just basically, having a vision for something and going out and just going after it. And then my dad, who was more, was a blue collar worker, worked at pharmaceutical plants when I was growing up. And, he always just told me like, whatever you want to do, it's yours if you just put your head to it and go do it. So,
dude, and that's, you don't need to come from money, right? Like, if you have that, that's way better than coming from money, than being given property. Like the support system and understanding that, dude, your secret weapon was the support system and your family saying you can do anything. Like that is so much more powerful than being given any asset or treasure or estate.
I agree, and I'm grateful for that. That's like one of the most.
You already won the lottery,
Yeah, exactly. So the combination of that and my mom, when we were kids, she would tell me like, you got to get into real estate. You got to get into real estate. They weren't in real estate.
Interesting.
But it was like she knew that like we needed to pursue that as a path to creating what we wanted for our future and what she foresaw we were capable of. And that just planted that seed. That was like, I was probably in middle school, high school. My mom started telling me like, you got to get in real estate. And then she actually took me to like my first real estate seminar. I was in high school.
Awesome, man.
I remember Philadelphia Convention Center.
Dude, you got great parents. I'd love to meet them.
Yeah. Look forward to that.
Yeah. So Philly Conference Center, and you're going to a real estate conference. How old are you?
I'm in high school. I'm probably 15, 16. So it was like in my mind from that point on. Went off to college, ended up majoring in computer science because I was also like a computer geek kind of in high school. I like to tool around, code, do stuff like that. So with the background that my parents gave me or that knowledge, I always knew I wanted to be in business. I didn't know exactly what it was going to be. And the way I kind of looked at the world is like, I need to understand certain things in order to be successful in business. And back then I thought that was, all right, you got to learn computers. Like this is going to be, a major thing for the future. So figure this out.
Smart.
Finance and business. I just figured if I can soak up as much experience as possible between those 3 things, I'll probably be able to figure it out when I learn like what I actually want to do.
I love that. I mean, that's 3 very, very, I mean, that's a great way of looking at it. Like, what are the industries that we see growth? What are the industries that command the other industries, right? What are the industries that create all the jobs, create all the opportunity? And you're like, hey, if I understand these, then I'm gonna be prepared. Like business has been around for a long time. Finance has been around for a long time. Being able to balance that for something has a future outlook, like with computers, I think creates a lethal combination there.
Yeah.
So it's good. So, all right, so you get out of school. Did you jump right into entrepreneurship? Did you get a job? Did you, how long did it take in order to start getting into the real estate thing again?
So got out of school and got a job as a software engineer, working with a local firm. So I did that for a little while and ended up getting laid off from that job. That was
because of the economy?
That was, definitely.
So this is like 2008, 2009.
Yep.
Got it.
Exactly. So it was kind of like, hey, we just brought you on. Sorry to do this. You haven't been here that long. We had, we were excited about your future here. We're pulling back, and it was kind of like that last in, first out kind of situation.
Yep.
So that was like a hard hit, because really having that, in my mind always I wanted to create my own business and be kind of the, curator of my own destiny. And then that happening, I was like, okay, this is exactly, I landed right where I knew I would be if I didn't like do what I want to do. So from that point, I was actually fortunate enough to link up with some guys who were starting like an environmental engineering, like infrastructure development business.
Okay.
And that took me off on like from the standpoint of, I had never been involved in that kind of work before. They brought me on as kind of like the IT, the technical guy, helping with a lot of that side of the business. And it was in a position where it was a startup. The other founders, they were coming out of pharma, so these are scientists, they're engineers, and basically couldn't afford to pay me at that point. It was like, all right, we're basically bootstrapping this thing, get it ready. And I just fell in love with that work. I've always been really passionate about the idea of contributing to something or being, dedicating my life to something that contributes to a change on a larger scale. And the environmental issues that we were looking at solving, I was like, I've never encountered anything like this. So like, I'm in if we can figure this out. So we went in, kind of dove in head first, and that turned into a deal where basically it's like I was the only founder who hadn't actually put up money to get into the business, but it was...
You got sweat equity in though?
Exactly. It's like, I can do this. I want to do this work with you guys, but like, we need to negotiate for equity because I have to live. And that's kind of grew into that. And now there's, myself and two other partners who were kind of the majority owners of that business. We still have that business today.
I love it. I love it. So what kind of work do you guys do on that front?
So that's all about clean infrastructure development. So we started out working largely in agriculture. So it was helping, farmers, large farms that basically were generating like more manure than they knew what to do with, right? And traditionally you just spread it all over the field, and it nourishes the fields, it helps it grow, all that. Right. So it's seen as like a environmentally harmless kind of thing from a lot of respects because it works. The problem is the manure is loaded with so much nutrients that it basically creates this problem where the runoff from that runs into the waterways. So in our area, it's like the Chesapeake Bay watershed. It's like the big estuary that's basically troubled by this. So have large scale like algae outbreaks that kills the water quality. Here, or closer to where we are, Lake Erie has had those issues over recent years. So it's like we dealt with it, like really attacked it in the mid-Atlantic area around Chesapeake Bay, but in large bodies of water all around the country, it's the same issue. So
because the runoff is high nutrient, it's actually adversely affects because there's the algae and some of the other things that live off of that then that creates the pollution in the water.
Exactly. They basically grow and flourish to the point where they suffocate the
other animals, all the other bio,
fish,
Interesting. So is that primarily still what you guys do? Do you guys do anything like with apartment buildings or solar or anything along those lines?
Nope. It was all about waste to energy. So taking that organic waste and generating.
So what do they do with it? They shovel shit somewhere else?
So basically, we developed systems that we go and we install and farm, and all the manure runs into the system. Right, and it's a combination of couple different processes, but basically we extract the gas from it, run that gas through generators or turbines, generate electricity, and then you recycle, the water, send clean water back to them that they can use for their herd, run the generator exhaust through systems to clean it up. So basically it's about taking this really, really nasty stuff and generating stuff that we actually need.
Wow, that's wild. Yeah. That's wild. That's super cool, man. It's cool to be able to look at a problem and come up with a solution that not only solves the problem, but creates positive outcomes elsewhere. That's wild. That's great. So how did that translate into real estate? How did you get into the real estate side?
So eventually we took a couple black eyes in that business, I'll say. We developed a couple waste energy plants that still exist today out in Lancaster County, Pennsylvania. And essentially trying to get those projects developed, you're trying to turn like a massive wheel. It's a lot of political, environmental, it's regulatory, all that stuff, if you kind of compare it to like apartments, right? From the standpoint of if you're doing like a new development, just the process is complicated, multiple times.
And when it gets into environmental, it's even more so.
Yeah, regulatory. So you're dealing with, the Environmental Protection Agency. You're dealing with all the way down to the local township level with zoning and so forth. So eventually we saw that business model was a little flawed in the sense that we were trying to build these plants in ag areas where they didn't want industrial development. So we've since transitioned that more to industrial projects.
But now you got to ship it over to the industrial area and then.
It's more focusing on, these big industrial companies, they need energy, they need cleaner solutions. They are looking to decarbonize the way they produce energy. And it just makes it more of a fit for like what we actually need to get done.
Yeah.
Yep.
Wild. So you develop those, and you're like, well, I've gotten a master's degree in this side of things, essentially, right? And how did you start buying and investing for yourself then?
So eventually, then this is the 2015 area. We were working on a really big project, and at the time, it was like we had 2 years into this specific phase of the project. Overall, we've been working on the project for about 5-6 years. And project basically was, almost pretty much shut down, because the permitting didn't go through. Like, last minute, it just didn't pan out for us. So myself, that was like a massive gut check, right? At the time, my wife and I, we were talking about, having a kid. We were in the way of that. And I knew that, again, it was one of those situations. Second time in my life. First one was being laid off from software job. This was number 2. But at this point, I'm married, we got kid potentially on the way, and I was like, I have to figure out what plan B is when plan A doesn't go right. I always knew that I wanted to be in real estate for this specific reason, and now's the time. Like, I have to go for it. And pretty much dove in head first from there.
So give me a year approximate of when this was? This was
2016.
2016. And you got into buy and hold, though. You didn't get in the transactional side, did you? A little bit?
No. So we started out, taking one of those high dollar training courses, right? We were like, all right, my wife still cringes to this day.
Yeah, we all did, man. We all did. Anybody who, we all did, but at least you did something with it.
Yeah, exactly. And I don't regret it. It's like, it's $28,000 for like, a week or 2 of training.
I think we took the same one,
It probably, yeah. And, but what it prompted and what it led to after that, I don't regret that at all, you know. So we did that, started out wholesaling in Philadelphia, surrounding counties. That led to doing a couple flips. And then that led to us being approached by a broker who was looking to start a property management business. And he's like, look, I see you guys out here, you're hungry, you're doing all this stuff. Some of the deals that we were doing, we were running through their brokerage, so they knew what we were trying to do. And he's like, if I start a property management division, will you come on and run it? And we're like, how about we start a company together and then we co-own it? So that's what we did. So we went deep into property management.
I'm seeing a recurring theme of you understanding the value of equity in businesses.
Yeah.
What got you excited about that? What was like the lesson learned of like, how do you even negotiate that, or why would you negotiate that, or if you have other opportunities, or what? Like, what was the impetus? Was there like some seed planted that like you need equity in deals? Like what was it about that where you had it with your environmental agency? You're doing it with this property management company. What was it that really pointed you in that direction that, hey, this is really important that you should get some equity?
I think it goes back to the seeds that my parents planted, and especially my mom with like starting the businesses. And it was always about like, you need to own, like you need to become an owner. So every situation I approached, it was like, even if they were offering me to get paid a little more to do this, that, and the other, I was like, I'll take less for equity because I know what my time is worth, and I know that over time, the idea is that the business becomes more and more valuable, and then it starts to outpace what I would get paid, you know, in cash, and I'll take that bet because I'm always just thinking like long term.
Yep, that long term mindset is a big differentiator between, unsuccessful people average successful people and very successful people. The very successful people, the more successful you get, the longer timeline I see them looking out.
Yeah.
Right? Like Elon Musk is thinking about a 500-year timeline right now. He wants to colonize Mars.
It's massive.
Like that kind of stuff. Whereas the person on the street over here is trying to figure out how do they pay bills on Friday.
Yeah.
It's a very different perspective and outlook of, what came first? Was it the chicken or the egg? Like, are they unsuccessful because, or are they not able to think on a short term? Are they not able to think on a long term basis because they don't make enough money for that?
Yeah.
Or, if they thought on a long term basis, would they make more money?
Yeah.
Which one came? Like, which one is it? And what I found is as I've gotten grown my business, the more successful my business comes is because I'm thinking about it on a longer term timeline, right? Like I used to want to make money in the next 30 days from a quick flip, so that way I can keep the lights on. Now I'm thinking about what are the assets I can own for the next 100 years.
Yeah.
If I don't see myself buying this property and owning it for the next 100 years, I'm not interested in buying it. Because that's the kind of timeline I'm trying to think. I'm trying to think on a long-term legacy type timeline.
Yeah.
So I think that's a great principle and a great principle to highlight, to have that long-term vision. Super, a lot of wisdom that comes from that.
Agreed.
So you end up opening the management company.
Yep. Opened the management company, and then my life went wild.
Yeah?
Yeah.
Oh,
Property management.
Yeah, you're riding a bucking friggin' horse.
Yeah.
That's a wild.
Yeah.
And you can't get it to calm down. You don't even have what stirrups or whatever the hell it's called. Like you're just all over the place, man. The management side of the business is such a difficult business to operate. Now it's cool because you got these contracts that are residual income producing contracts. Mm-hmm. You don't have to buy them, right? You don't have to put credit on them. You can create a lot of value in a management company through these contracts. That has enterprise value to them be able to sell it in the future. But the reality is, man, it is a hard business. And we had 600 or 700 houses that we were managing here in Cleveland, which was I don't know, I gotta believe it's one of the larger property management companies that was in Cleveland. But every time we made money, dude, we had to hire somebody else, and then you didn't make any money, right? And then you got profitable again, and then you gotta hire somebody because you grew so much. And it's like, dude, we could never get ahead, and we eventually ended up selling it. Because the other thing is, it was a distraction for us, because we wanted to focus on our own portfolio, not managing other people's stuff. And dude, you're just a punching bag all the time, right?
All day.
The city hates you, the tenants hate you, the landlord hates you, everybody. You're getting hit from every direction. It's just a thankless job.
Yeah, and to add on, to complicate that or to make that torture worse, we were dealing primarily in college student rentals. So this is like inner city Philadelphia, like Temple University, Drexel University, like around that. So from that standpoint, we were managing, when we first started, we kind of started with a base of like 80 properties. Mm-hmm. And we started soaking up management business so fast from these other local companies.
Because they're all garbage.
Nobody's happy with the property manager. Mm-hmm. It was like, we would I'd go to a meeting, I'd meet a guy, he has 10 houses, and then I'm walking out with 10 contracts. Yeah. And it's like, what in the world just happened? So that basically led to, over a year and a half period, we basically ended up with about 350 units.
Wow.
And
that's big growth fast.
Yeah, it was just crazy.
Were you prepared for it? Like hiring and built, we were growing so quickly that, you want a job? You raised your hand, you're hired. Yeah. I didn't screen them, I didn't train them, I didn't measure their performance. We fired everybody within 6 months. And then I was like, it was their fault, right? And I did the exact same thing again, and I had to fire everybody again 3-4 months later. And I was like, time to start looking inward. Like, this is my fault, And I need to actually screen people.
Yeah.
I need to train them properly, and I need to measure their performance, put KPIs in place. But if you don't do that, man, it was a hairy business to be in. So, so what'd you do once you got to 350?
So we got to 350, and we were basically pulling our hair out. Mm-hmm. It was literally, we had a point where COVID happened, so we're 2020. We get to toward the end of 2020, and we really, our partner and I, we looked at each other and said, look, this is not why we got in. You know, we had another day, you know, we grab a beer or something, you know, we can share war stories, but we had the craziest stuff happen.
Yep.
But the beauty of it was we basically were fed through a fire hose, like how to deal with all these issues. So truncating that, you know, within that 2.5 year period was like massive, I think, and really like put me in a place where my confidence going forward, I felt like we were almost bulletproof. Like we just got through that and we dealt.
You learned how to swim by being thrown in the deep end.
Yeah, exactly.
And you're like, well, if I can swim in the deep end, I can swim in the shallow end, right?
Yeah.
Like,
and then those 350 units, there's college rentals, so there's these big houses that these guys were buying, just filling them up. So we got 5-6 tenants in each one. We have 1,500 plus tenants between that, and so that was just huge. So we got to the point where after COVID happened, we went through that. That didn't really affect the business too much, thankfully. But we kind of had we had a meeting. We had to come together and kind of reset. We said, we're never going to get where we want to be on owning our own units if we're managing everybody else's. Like we thought we could do both, and we thought it would provide a nice pipeline for us to kind of feed our units into the management company. The reality of it was we would never jump off from that. So we actually approached our partner, and we, had a discussion. We said, look, it's not really working out. Like we gotta kind of reset and do what's best for us at this point. Thankfully, we were able to negotiate an agreement, kind of get bought out of that, and that was 2021. That was February 2021. And then we kind of immediately just switched gears to going out and looking to buy our own assets.
Addition by subtraction, man. Getting rid of the noise, getting rid of the headaches. I see it in a lot of different things, and firing clients, right? Like, I would never fire a customer. You fire a customer, you fire your bottom 20% of headache customers, gives you way more time, right? Like that 20% of the bottom customers that don't spend the most money are 80% of the problems. You fire them, and all of a sudden you have 80% of your time back, and none of those headaches, right? Like, boom. Now, how do you keep on doing that? And it's like that Pareto rule, the 80-20 rule, is like something you have to work in, because if you just keep on firing the bottom 20%, eventually you're left with nothing, right? But that's a serious thing. I think everybody should look at their business and look at their life, right? Minimum on an annual basis when you're doing your goals or whatever, but really probably on a monthly basis. Like, not just what can I add? Everybody always looks at what they can add, but what can I subtract from what I'm already doing? What can I subtract? And it might be something that's working, but not as successful as something that could work better. And that's really where it gets tricky, especially for entrepreneurs. Like, hey, I'm making money, I don't want to shut this down. But like, what if you didn't do that and you just focused all the time that you did that, even though you're making a little bit of money? What if you took that time and you focused over here? How much more could you make? Right? A similar when I was doing the single family, moving over to rent to multi, I looked at my net worth and where am I spending my time? And my net worth was 90% apartments, but it was only 10% of my time. Meanwhile, I'm spending 90% of my time flipping houses. That was 10% of my net worth, 10% of my income. And I'm like, well, what are we doing here?
That's
right?
Huge.
But if you're not reflecting on that stuff, if you don't actually get intentional about, cataloging your time and cataloging your efforts and cataloging what you want and what you don't want and comparing it to what you're doing at the time, dude, that's where you find yourself on a hamster wheel doing the same thing year after year. And you got to be reflective of that stuff, because otherwise, man, it'll eat up your life.
And it's easy to that point. I think that's an awesome point, because it's easy to kind of get caught up in the activity, right? So flipping all those houses, that feels like, if you're flipping the houses, you're making profit, like you feel really successful, you know what I mean? You're doing that volume versus, the other side of it where because you're dedicating less time, might not feel like it's, so that's a very good point with that long-term outlook.
All right, so you get the headaches of property management off your plate, but you've refined the systems, the processes. You understand how to manage. You have the resources, you have the connections, you have the real estate attorneys, the housing court rules, and all this other stuff. And so what does the next step look like? How do you start building a portfolio from there?
So from there, we just really honed in on just building and developing relationships with local property owners. And from our wholesaling background, that was kind of the way we got into the game. I've always like approached things from a service-based mindset. And still to this day, I think that that's one kind of edge that we have like in our areas, that I don't always care whether or not I get a deal out of something, because I know that even if it's not that specific transaction, that's going to lead somewhere.
I love it.
Like that person has family, has friends, has, other people they know. They might have other properties, they might not be interested in talking about anything right now, but if I can like be of service to that person and like be a bright light in their eyes, when they do hear about something or when something does come up, they're going to call me.
I love it.
So that kind of like really put us in position to start to.
Again, it's long-term game, man. You're relationship-based, not transactional-based.
Yeah.
And because of that, it comes across differently.
Yeah.
Right? You don't come across as desperate, like I got to do a deal. Instead, it's like whenever you're ready, right? And that makes a good deal for you, makes a good deal for the seller, and that not coming across with that desperation. It's they want to do a better deal, or they want to do a deal with you because it just, I don't know, it feels more comfortable.
Yeah, and meaning it, because just digging into that place where it's like, okay, what am I here to do? What am I here to contribute? Right? At the end of the day, I really just want to see people successful. Right. I heard a quote. I was listening to a sermon. I think it was like last week. And it really like kind of struck me. I'm running on a trail and I'm listening to this. And the guy said, if all of your dreams were to come true, would it change the world or just yours? Right? And that like,
wow.
I always have kind of thought along those lines, but I've never actually heard it in a way that like really resonated with me. And that just hit me. And it's like, that's it.
That's powerful.
That's
Thank you for sharing.
Yeah.
And so if you're sitting down with somebody and they're interested in learning how to build a rental portfolio, what kind of advice would you give them? Like, what would be the actionable advice, step by step, that you would give them in order to start their rental portfolio and start getting things going?
I'm really big on the why, right? And there's a lot of, everybody talks about the why these days, but I think it's thrown around as kind of more like a cliche thing than I see people actually digging deep and understanding what that means for them.
I agree. It's very surface level because it's overused right now.
Yeah. Or they attach it to something that, somebody else because it seems cool. Like,
they're borrowing somebody else's goal because they never really did the introspection to look at what is so meaningful for them to then pursue those goals.
Yeah. So that's where I'll always start. And that's, I revisit that constantly with myself, just making sure I'm still on track with what's really important. And I think that for any new venture, real estate especially, you need to be extremely clear on what you want and why. Like, what does it actually mean to you, right? So I think that's I would 100%, that's where you start.
Yep.
And really digging deep on that. And then from that, it's all about, I think, tooling, right? There's a school of thought that says, you just dive in head first. Now, even though I did that, right? Looking back, I wouldn't recommend it. You know what I mean? I didn't dive in like completely, off the cuff. I had training and did all that stuff, but kind of learning trial by fire. I don't believe in that. I don't believe in taking unnecessary risks. So I think that the way that you mitigate that is to really go and learn, right? Really get clear on what you want. And then when you get around people who are doing and have achieved what you want at some level successfully, they can tap you into, what you're doing and what they're doing and help you kind of guide that path.
I agree, man. No, I think you obviously have to take action, because otherwise there's analysis paralysis. And I've met people who've been studying real estate for 7 years. They missed out on some of the best years of real estate ever, because they were trying to have all the information. And at the other end of the coin is there's people who just, guns slinging, they're just jumping into deals without knowing anything. And hey, there's a lot of action that's exciting, but the reality is, they went down in a burning building of fire of their business, right? Because they were never prepared. They never asked themselves good questions. They didn't surround themselves with good people or good resources and lean on other people, learn from other people's mistakes, learn from other people's successes, and never asked themselves those reflective questions. And so I think you have to be doing both at all the time, right? At all times. All right, learn a little bit. Let's go take some action, right? Learn a little, and then reflect on what worked, what didn't work, and you're learning more. Learn a little bit more, get to the next level, and keep on leveling up that way. But you need to be doing both of them all the time, But the education, just taking action without education, you're gonna learn, but it's gonna take you longer, and you're gonna lose a lot of money and a lot of time.
It's gonna hurt
because you're trying to do it all on your own versus going out and getting the education, or finding a mentor, finding a local real estate investor association group, joining a mastermind, joining a course, like watching the Legacy. He's filming a Legacy Wealth Academy course on the 12 steps of how to build a rental portfolio. It's $9, right? It's $9 a month in order to get into that, along with all the other master classes. And I'm thinking, like, the resources are out there. Just put in the effort and then go take action.
Yeah. And the important part, the other important piece, like you said, is surrounding yourself with the right folks. Right. That was like the direct kind of path to me joining your mastermind. Like, I had kind of been out looking around different solutions, and I'm popping in and out of different groups, and none of them ever like kind of resonated with me in the way I want to do business. And then when I found you guys and like really kind of tapped in, you took Commercial Empire. I think that was over a year ago now. But when I saw what you guys were doing, like, I kind of felt, really what you were building, and the business model was like, this is it. Coming from a wholesaling background, it's like you kind of see the similarities, and I'd never seen or never tapped into a group that was really attacking it from that way, whereby you can create so much value, but really from a risk mitigated standpoint.
Right.
And that just really resonated with me. And I was like, I have to get around these folks. So big ups to you for.
No, man, I appreciate it. It's been, but you don't have that wisdom. You don't have the understanding of how to mitigate risk until you took that risk, or because, like, either I learned it or I learned it from somebody else that I directly watched mess up. And I was like, I don't want to do that in my business, right? And I think the business model will always shift and pivot a little bit based on what's going on with the market and the economy. And, like, we're around the same age. So when we graduated from college, it was like short sales were a big deal, right? And then loan modifications were a big deal. And then it was bank-owned properties. And it was like some creative finance and structuring kind of things. And then it turned into the Burr method. And then it turned into all this other stuff. And so it'll always pivot a little bit. But that's the importance of being in the right rooms and surrounding yourself with the right people, and people who are out there doing the activities in the current market and learning what worked for them, what didn't work for them, and then you can pivot without you having to learn that hard lesson yourself. And I think just being in a group of people who are open, who are willing to share, willing to have discussions on this stuff, who have an abundance mindset, and say, hey man, we can all win together. It creates a lot more collaboration than it does competition.
Yeah.
So what does the portfolio look like today?
So today we have about 44 units, 44,
awesome.
And we're working on a couple of deals right now that between the two would be adding 2021. So not counting my my eggs too early, but
all in your own backyard.
Yeah, all in our own backyard.
And I think that's an important piece too. I mean, people are like, oh, what's the best market to invest in?
Yeah.
And you're like, well, I want to go to Texas, or I want to go to Florida, or I want to go to the Southeast, or I want to go to the Midwest, or like everybody's got arguments for why certain markets work. But a lot of times, the people that I know that are on the coastlines are like, real estate's too expensive here, or there's no deals in my backyard, or it's too tenant friendly of an area, or there's all these excuses. But I'm a big believer, man, there's acres of diamonds in your own backyard. And I think it's so wise that you wouldn't go, because you already have all the connections, right? If I buy something in Louisiana, now I got to learn friggin' French law, right? Because it's like French Cajun law influences down there that no other state has to deal with, right? And then you have to find a new real estate attorney to handle your evictions. Then you have to find a new management company who only manages there and doesn't manage somewhere else or whatever. And then you have to find like all these other local resources and figuring out there's a learning curve to getting into new markets where you already knew your market and you knew the resources and you already had the connections. So it was that much easier to then parlay into that, you know?
Exactly.
And, worst case scenario, you got to go put your eyes on the property, right?
Yeah.
Not worst case scenario, but like, it's a good management technique.
Yeah.
A lot of people are like, I don't want to work. I don't want to do this. I want to set up everything passive. Like, there's management by just going and visiting the property and just showing up. All of a sudden, people sit up a little bit more proper and they make sure that the litter's picked up in the yard, and they call on that car that's on cinder blocks over here in the parking lot and get it towed. And Dude, if you're not putting your eyeballs on the property, if you're not visiting the property, it falls to neglect, right? Other people aren't going to care about your multi-million-dollar real estate portfolio the way that you're going to do it, and you have to treat it like a real business that it is,
100%. And we are actually we built a small management team, and we are managing those units.
You're self-managed, right?
We're self-managing right now. Yeah.
I would say that that's one of the 5 keys to the wealthiest and smartest real estate developers and operators that I know, with the biggest balance sheets, the biggest portfolios. Do they buy good property in good areas, put good financing in place, they self-manage, and then they hold forever.
Yeah.
That's the key, man.
Keys.
And that's what you guys are doing. So what does the next 12 to 24 months look like for you?
So right now we're in the process of kind of resetting, not changing, but it's more so looking forward, because we're ready to grow. Mm-hmm. And the mastermind and getting around the right folks, and really kind of somewhat systematizing everything we have, systems and processes in place. We have a solid team now. There's five folks. We just brought on another guy a couple of days ago who's going to be our in-house maintenance contractor coordinator. So we're really at a place where we see these opportunities to grow the portfolio, and we just really are making sure that the team is right, systems and processes are right. We really just took a step back from chasing the units, because the first,
smart.
We're picking up small apartment buildings. I mean, small in the context of between 6 and 12 units. Our biggest one is 13 units.
I like it, man. It's bigger than the small guys, smaller than the big guys, right?
Yeah.
It's a sweet spot. I really like that $1 million to $10 million price point, because it's just, you're dealing with mom and pop, right? You're not worried about some institution who has a team of attorneys that's trying to screw you, right? Like, you're dealing with the local bank and local banker, instead of, again, some institution that is just pushing a headlock on their loan terms. Like, it's just, there's ways to mitigate risk by being in that asset class. It's easier to sell those properties in case things do go sideways or something tough happens. Like, if you own a $100 million deal and something goes sideways, you got millions of dollars of carrying costs or infusion of capital. Like, there's way bigger headaches in that, versus you can go buy $100 million of property in $1 to $10 million increments, all in the same area, and have the same scale as buying that single. But like, it's all within 22 minutes of each other, and they're all like right there. So now you have the scale, you have the in-house team, and you can build it that way. But if you need a capital event, you sell off just a little portion of it, right? You sell off one building, or you refinance that one, or like there's not. It's not as slow of a ship to turn around if things get difficult,
Yeah.
When you have this big battleship of a portfolio, and it's only in 1 or 2 properties, I find it's very hard to kind of maneuver and move, and it's slow and it's costly and it's timely, versus having a lot of little stuff in one area where you have the same scale, but a lot less risk. It's mitigated, and you can maneuver and be a little bit more nimble.
Yeah, that was definitely a very intentional kind of part of our strategy. We wanted to be so kind of in the area where we're working with the mom and pop landlords. They're like a little bit more advanced, but they're not, again, you're not dealing with institutions obviously at that level, but
they're open to the seller financing, but they're not, trying to get points and closing costs and attorney's fees and like all this other stuff like a lender would,
So we're not competing with this, just a segment of the market where the guys are like, I can't manage an 8-unit building. And then, so between that and you get to above, 25, 30 units, and then like in our area, we know who are kind of competing for those, and building relationships with the local banks, the brokers, and staying really tapped in on that. We've created kind of a window where we saw like, all right, kind of between here and say 20 to 25 units, like that's a gap where there's less competition, at least in our area. So that was kind of where our focus was. And now we're looking at, okay, how do we look bigger than that and get more economies of scale? But first, let's dial back on trying to get as many units as fast as possible, make sure our base is right, and then kind of roll back into that.
Smart, man. If you have a good foundation, then you can build a really, really tall business on top of that, right? But if you have a shaky foundation, it's going to crumble as soon as you get bigger, it exacerbates the good and the bad that's going on in your business, right? It amplifies it, puts it under the magnifying glass as you grow. If you grow well, it's gonna show how steady you are as you continue to. If you had a good foundation, I mean, and if you had a rocky foundation, that's only gonna it can only get worse as you grow if you didn't do it the right way at the beginning. So again, man, I got a ton of respect for how much wisdom you have in forward looking, right, and the ongoing long-term mindset that you maintain.
Thanks, I appreciate that.
So it's good stuff. Give me the high level overview on what you're going to be talking about in your Legacy Wealth Academy course.
So high level. So just a quick background. Basically, what I really want to create is a pathway for folks, and you mentioned people that have been studying real estate for 7 years and haven't done anything yet, right? Mm-hmm. So kind of seeing that and just okay, we actually started buying in 2021. This is what we have, $5-6 million portfolio and growing and very comfortably. And we've done it while, also running, other businesses. Mm-hmm. And really when I talk to people, we've been helping people and I've been unofficially coaching people over the past couple of years. Mm-hmm. And a lot of what I run into is just, the mindset shift, kind of never having taken place where people feel like they can actually do it, or they are basically just riding with the blinders on and they kind of know that they need to do something, but they're like, well, I'll put that off to some distant point in the future when it's more convenient. So really
frozen by fear.
Yeah. And I think I have a genuine fear for a lot of people that are not creating their plan B. And a lot of folks I talk to, they know, but it's okay, we had the same discussions last year, but you're not taking action. So really what I did was we put together a kind of a combination of what we know from experience you need to basically develop a sustainable and scalable real estate business. Mm-hmm. And making sure that we address all the common points that we hear from folks who are, stuck at one point or the other and stuck from starting, altogether, and have basically designed a 12-step process that's almost like a high-level playbook, if you will.
I love it.
So starting in, mindset, right, going all the way through goal setting, how to find properties, how to negotiate, how to fund, how to structure deals, how to mitigate risk, how to manage properties, and really just structuring that in a way where it's absorbable and obviously, can't dump years of knowledge on, within, a few hour time frame, but giving you a playbook so that you know the ropes and what you need to do if you are serious about this, and really just delivering that message that it's attainable, and using, properties that we've purchased and deals that we've done as kind of guideposts or, examples to show the real world.
Dude, I love it because everybody thinks that I need to know all of it first. Dude, let's attack step 1 first.
Yeah.
Then let's attack step 2. Yeah. Then we'll cross the next bridge when we get there. But we don't need to be worried about crossing that future bridge because we need to focus on this one first, right? Let's attack this one and overcome this obstacle first. And the little problem solving and the little overcoming of this piece of action step and then the next one and the next creates this momentum that then sets in where now you're ready to solve bigger problems, in the future as you hit the next step and the next step and the next step, man. So I think it's a great way to just put it in bite-sized chunks where oh yeah, you know what? I can attack this and I can do that and that I can do that this week, right?
Yeah.
Boom, done. What's the next one? Now you can worry about raising money after you find the deal, right? Or you're worried about underwriting the deal after you put some marketing out and get some deal lead flow coming in. And then, you take these incremental steps and it's a lot easier to digest that process, the more steps that are there and just kind of chipping away at them. So it's cool, man. I'm excited. I'm excited for you. I'm excited for the portfolio growth. I'm excited to see how that continues to move forward for you guys. And dude, it's just, it's an honor having you part of the community, brother. Yeah. And if there's any way that I can support, I'm here for you.
I appreciate it, man. Appreciate you, appreciate the community. And the team you've built, everybody's been just marvelous. Dude.
Awesome, man.
So.
Hey, hopefully you got a ton of value out of that. If you got some good insights, I'd love to hear it in the comments section. Please share this with somebody who might get some value out of it. If you would do me a favor, just give me a like on the video, and make sure you're subscribed to the Legacy Wealth channel. We're always trying to provide great value, insights to help you out with your entrepreneurial journey, building up some wealth, your personal finances, and obviously real estate as well. So appreciate you. See you on the next episode of Spilling the Beans.